We have a special guest joining in this morning. We have Avinash Gorakshakar, Head of Research at ProfitMart Securities. Mr. Gorakshakar, good morning. Thank you so much for being here with us. Help us understand what is the mood of the market today. Are we in a consolidation space? Is this just a little bit of buying that we are seeing because markets ended a little lower yesterday? What's going on in the Indian stock markets?
No, I think good morning, Kartik. I think markets are going to consolidate. I think clearly, I think the markets have seen a very strong runaway rally. And I think largely aided by, liquidity both from the domestic as well as the FIs. And most importantly, I think global tailwinds are now shaping up well. As you rightly pointed out, the mood in the market is that trade deals are going to be announced with India also in a very short period of time. India has already entered into a trade deal with four European countries, and that I think was a big sentimental booster. Plus, the rate cut which came this time, Karthik, was a big surprise. I think a 50 basis point cut is going to actually make banks as well as NBFCs look more interesting now in the coming quarters.
Uh-huh.
And for the corporate earnings as a whole, I would say that rate sensitive sectors like automobiles, real estate, capital goods, manufacturing, construction companies. These are the pockets where I think you're going to see a lot of improvements in the quarterly numbers, specifically for the July to September quarter. So
All
I
right.
think all said and done, I think once the monsoon progress is known in the next couple of months, I think the markets would start taking this positively, and we could see a reasonably good trajectory, from September. I think globally, sectors like pharmaceuticals, IT, they would continue to move up once the trade deal with the US is announced, and I think some clarity comes on the tariff measures. So I think net it's a buy on decline market. Today market may open flattish, considering the fact that now 25,000 we've reached this level. But to
Yeah.
cross it consistently, I think you'll require a few more triggers, going forward.
All right, few more triggers, but let's talk about one of the triggers that you spoke about, and that is the RBI rate cut bonanza that we saw. But banking stocks that I'm seeing this morning, and again, that has been the trend yesterday and today as well. The banking stock seems to be, not really reacting very well to that rate cut, simply because their net interest margins are likely to come under pressure. That doesn't seem to be the case with NBFCs, which don't have to immediately pass on the benefits of the rate cut. But again, from a pure play RBI decision to cut 50 basis points, given what we are seeing with China, with this fear of inflation likely to creep in, at least for white goods and the auto sector, with the export curbs on rare earth magnets, do you think the RBI hurried into that 50 basis point cut, or do you think the timing was quite perfect?
No, I think first of all, I think RBI wanted to give growth a bigger fillip, and I think to that extent they have taken a calculated risk. I believe that near-term headwinds for inflation may be there, but in the medium to long term, I think most of the public sector banks, private sector banks are going to cut down interest rates, and that is definitely going to be a big booster shot for interest-sensitive sectors. So I think net, we'll have to wait for maybe a couple of months to see how the rate cuts happen, how the benefit of these interest rates cutting is going to help these companies. But my sense is the July to September quarter is going to be a much better and a significantly better quarter, which would get reflected into better earnings numbers. Because clearly, I think wherever the interest sensitive rates are there, especially if you talk about real estate companies, automobile companies, they would definitely benefit. And yes, as you rightly pointed out, Karthik, the rare earth problem is going to continue for a couple of months before some final solution is arrived at. As of now, we have heard many companies cutting back production because this is a very
That's
critical
right.
input for electric vehicles. So I
Yeah.
think we'll have to wait and watch, but I think some solution will definitely come in. I don't think the government would like the EV industry to come to a complete standstill.
Right. But the fear of inflation, do you think that is real, especially when it comes to white goods and automobile sector, at least in the near term, because any sort of truce between India and China could also take a little longer, and auto companies already cutting back production. That seems to be some sort of a sign where inflation could perhaps creep back in, and then it'll be difficult for the central bank to hike interest rates.
Yeah, I think, see, basically, there's definitely the possibility of interest rates moving up, specifically looking at auto and white goods, looks a very strong near-term possibility. But I think we'll have to wait and watch for a couple of months. See, because as of now, most of these auto companies have got enough inventories of this critical raw material. But in case they stop production and prices go up, there are some shortages, then that could possibly spike up inflation. And that point of time, RBI could face a big challenge. But I think, for these things to happen and fructify, we'll have to wait for a couple of months. I'm pretty positive that inflation will be within control, but, challenges obviously continue to remain.
All right. Finally, I want to draw your attention to the energy stocks this morning. And again, after we saw that some sort of a tentative trade deal struck between US and China, the oil markets are responding positively. We see Reliance is up about 1.3% in trade. ONGC is up about 1.1%. So is the case with Coal India. Now, these seem to be really taking the benchmark indices higher this morning because all other sectors seem to be reacting in a mixed manner. So from here, how does the oil story the crude oil prices and the WTI prices, given the fact that China and US are more likely to work closer together in the future, how does the oil story pan out from here, Avinash?
No, I think my guess is that at least in the very near term, I don't think there could be any major spike on the crude oil price front. Although yesterday we saw a little bit of upside there. See, my sense is that it all depends on the demand supply scenario. China has been a big buyer, but then of late, their buying has reduced, and India is a very big buyer of oil in the global market. And looking at OPEC and the kind of supply logistics which they have, initiated, I think at least for the next 2 to 3 months, Kartik, our sense is that crude prices will remain in a close range.
Okay.
Thereafter, of course, we'll have to see what kind of developments happen, what is the kind of oil demand expected from China. But overall, I believe that this year crude may not give you a bigger kind of a negative surprise.
Okay.
But post September, we'll have to take a fresh aim.
All right. So everything now hinges on the next quarter in September. And by the end of September is when we are likely to see some more action and some more definitive trajectory for the markets. Avinash Gorakshakar, thank you so much for your input and for joining us here on News 9 this morning.